Good evening, everybody. It's Michael here. It's the 1st of June 2019, 6 months into the year. I hope you're all well and trading well. I thought we'd go this evening and do some short-term analysis of the markets. We did a big review. I think it was about 10 days ago now, so a lot of those monthly charts we reviewed will now still be in play, obviously with the new month beginning and May ending. Had some big moves in the markets, particularly on the last day of the month, so lots has happened in the energy markets, oil and natural gas and gasoline, and also in the bond market. As many of you know, I've been long the bonds for a while now. It's gotten a bit frothy, but let's get into it. Please read the disclaimer. Read the disclaimer. It's important that you understand this is just for educational purposes. If you wanted to get in touch with me at any point, if you wanted to talk about your trading or join us round table, or even if you wanted to come on the one-to-one training with me, just email me at storehouseanalytics@gmail.com. Okay. All right. So let's go take a look at the charts. Let's go take a look at the dailies. These are the same charts. I haven't touched them since the last video. So we'll start with, we'll do the dailies for short-term income. We'll start with the US dollar. So the levels we marked off, I think we did the last video on the 20th. We were together on the 20th. So we were up here somewhere, and the demand zones we marked out have produced a bounce. It's still pretty flat. The US dollar, it's still trying to find direction. Obviously a huge move, as I said, on the last day of the month yesterday, with a big move down. Still working off of this area of supply that's been tested. Its prices have gone through it, but they haven't really closed anywhere near above it, so we still have that area of previous resistance that is being held as support. Obviously we have the demand zone there as well, where prices went to. Just looking to see what's above us. I thought there might be something above us, so we have those two levels that we marked off as well that are still above us. So going into this week, watching the dollar coming back into demand again, we'll need obviously now to see a bit more confirmation, seeing that it'll be the second time back into this level. The market still hasn't broken any significant demand zones. You can see we're still going quite high. You can see the general direction of the dollar is still pretty much in that direction. Classical technical analysis is that we've broken above, we've come back. We haven't been able to get away though from that breakout area. We've been bouncing back and forth, and the dollar with it. So right now, anyone who's been long with the breakout is not really going anywhere. You're spinning your wheels up in here, and we're waiting to see whether the market will gain traction. Maybe a bit early to short it, but definitely one to watch. And it sort of brings it also back to the euro, which is the corollary to this market. And you can see that the euro itself continues to go down, but is now being held. You can see that it's found demand down into this area that we marked off the last time we were together. Still hasn't broken it convincingly, hasn't gone below it. And we're still just sort of going nowhere pretty much in this market. We need some movement in the next few weeks to break out. For a short-term income trader though, buying down in these areas is still up in play. Very short-term, obviously you're going to be using confirmation. Looking at what supply we have above us now, there's still no quality until there, so there could still be room to go. The reason I'm not choosing this area as supply for now is more to do with the fact that it's still all within this range. So watching it as we go up, you may want to look at it. If you want to take it, I would suggest using confirmation. But it's a very sort of spinning market right now. There's really nothing much happening, at least not in these major pairs. Let's take a look at the Aussie. So the Aussie is still hitting when we were together. We were here on the 20th. It's come out of that supply zone and it's gone back. Now it's basing at this level, which suggests there's a possibility we're going to try for higher prices. It's just a suggestion. It may still turn and go down, but the fact that after coming back here the second time we haven't left the area suggests there may be a desire to take this market even higher. If we do go higher, then obviously we're going to be creating demand as we go, but there will also be that supply to deal with up into that level. For now, we seem to be using this area as the demand level. So these will be the levels that will be caught in between as we go into next week. These are the levels we're caught in between. Obviously, we'll update our charts as the week goes on, as new levels form. So again, the US dollar it's in a bit of a tricky place. You definitely don't want to be buying into this level now, even though it's tested. It would be really, really too aggressive, at least the way that I trade, for any buys to take place now. And going into the pound, obviously with the uncertainties around Brexit, it can be a challenging market to trade and hold for the long term. Short term, there have been some opportunities if you've been able to keep your wits about you and trade it. The guys on the round table, some of them have taken significant trades in this market on the short term scale. So it is doable. You just have to be nimble about it. Nothing seems much to have changed since we last met. The supply zones are still holding. Prices are still making lower lows and lower highs. Right now we need to get above this area if we're going to see any hope of or any suggestion that buying is coming into the market. We're going to need to get above 27.47, call it 27.48, to get above there for us to gain any sort of traction to the upside. For now, shorting and trying to find a way to engage this trend is probably the higher probability trade to take. Yeah. And that will be on smaller time frames. I try to get in on it. If I were trading it short, it would probably be up into these levels around the 126.600, 126.50 area, looking for supply zones up in there. Looking at the New Zealand, you can see that since we took out this supply when we were together on the 20th, we were coming down, we were basing here. We've now created supply, come out of it, taken it out, and we're beginning to use the demand that took it out as the base to try and get some traction. So we've gone sideways in this market. Still have some supply up in here. Demand is holding. There's a little bit of room. It's very tight to trade short term to try and get it higher into these levels. It's a bit tight though, so do be mindful of where you're buying. And if you do buy, you have supply coming up against you at these levels around the 65-60 area. Okay, so that's what the short-term picture of New Zealand US dollar looks like. We missed the US dollar Canadian. So the US dollar Canadian, as you guys know, I have a position in this. I've been long for a while now. I've been long from in here, like I said, coming out of the position as this market has gone up. We've got the last batch to go. In terms of short-term trading though, here's our demand zone right there. And in terms of supply, we are still in that big, huge area that's just held prices down. You can see the basing that took place all through here with the breakout now above it. Now the question is, will it hold that breakout as we base through here? What we're waiting to see, will prices hold that breakout? This last week's candle is not encouraging at all, because it suggests that selling came into the market later in the week and managed to get prices down to these levels. So we didn't go fully bearish for the week, but we didn't get too much higher than last week's close, and we definitely haven't closed above the highest high that we've made in the last so many weeks. I think this must be a 52-week high here. I could be wrong, but I think that's a 52-week high. So that's what we've got. We still have lots of room to go into this huge supply area here, so we'll see how we go with that one. If we do pull back, that may be an opportunity to try for short-term trades into that level. And the US dollar Swiss. So we were working off of that supply. We created new supply into this level, and you can see that that's the level that prices have been working off of. Now we're coming down into a little bit of demand. It's not fresh, it is tested demand. We're coming down into that level, so not a place to be selling now. With that big move into that area, there probably will be some buying, or at least attempts to buy in this area, which may cause the shorts to get freaked out, and some of them puke out some of the shorts. There will be others who will try to hold, who have stops still above here. So for this week going in, it'll be watching the US dollar to see if it gains any traction against the Swiss down in here. Yeah, no short-term selling really for now. And the US dollar versus the Japanese, obviously with the risk-off atmosphere, there's been a run to the Japanese yen, which has caused it to gain against the US dollar, particularly on the last day of May. So for now, we now have supply above us here, and another supply zone there, which was coming off of that one. So those are the levels we've got above us, and below us there really isn't anything. You would have to go way back, all the way back around here. In fact, we don't. This is the level that's still holding, but for the fresh level you need to go much more to the left. So that's what we've got. So still quite bearish in the US dollar Japanese. Taking a look at gold. Gold has had a big day yesterday, and we are now up into fresh supply. So we were down in here. If you watched the video from last time, we found this demand zone, and that's the demand zone that's resulted in this move. So well done to those of you who managed to get trades off of this level in gold. We are now into fresh supply though, so again, not the greatest place to be trying to buy into this market. Buying after there's already been a big move in the short term in price is never really a good idea. So we'll have to see though, as this trend has gone into an uptrend now, if there will be any short-term selling up in here that we can piggyback to see if we can get any short-term sells. So that's gold for now. No buying for now. And crude oil as well. Crude oil, we can update the chart now. So we were working off of this area. Still, we came back up. We didn't quite get to the demand, to the supply that we were looking at, and prices just fell and broke really hard. So we're looking now at the supply zone up here. I'm sure many of you already have that marked. I know the roundtable members have that. Some of the roundtable members took this trade in the WTI. So that's what we've got for supply. Some of the guys are in that. And in terms of demand, we're coming into that area now. So again, not the greatest place to be selling. To try to join, we probably will get a small bounce, if any, and see if we can join the trend. So I was saying some of the roundtable members are in this. I know you're in it. You know who you are. So yeah, they got in short there. This is the WTI, and it's been coming down as well. The supply zone above price is not as well formed as in the Brent. And if you look at the differential between Brent and WTI, I think you'll find Brent is a little bit stronger, if I recall. So that's what we've got in terms of the supply above. In terms of demand below, you will be finding some buying in here. Again, these are just short-term bounces because the trend is definitively down now. So any buying, you have to understand, is going against the big picture trend. So if your trading plan allows you to do that, great. If not, you're sitting on your hands and just waiting now. And for copper, again, China, the US, the trade wars affecting copper, because China is a big user of copper, and we have the market just cascading down and going all the way down. Now we are again sitting in a little bit of demand that's been tested before. We've gone a little bit lower into that level. We have supply above us now. Watch this area. There may be some supply forming. It's still not fully formed yet. It may be in the embryonic stages of formation, but for now it's not a zone that we would use right now. There's a big demand zone down in there as well in copper. So that's what we've got in terms of levels in the short term. So if we do get a hold in here for short-term income trades, great. Again, it will be counter to the big move that is happening. The general cascade of the market is to the downside. Alright, as requested by some of you guys, let's look at the indexes. Actually, well, let's look at the CFD for this one. Let's look at the CFD. Yeah, so this is what we've got. So this is the S&P 500. We've got supply showing up everywhere now. This market has been under a lot of pressure of late. The nearest sort of even close, it's not even a great quality demand zone, but it's one not to be selling into, is what we've got coming up right now for this week. So this is what we've got going into the upcoming week in terms of levels. Obviously this will change as the week progresses and new price action takes place, but for now this is what we've got: a downtrend, supply zones being formed, and you're trading through demand zones. So you want to be mindful of that if you're doing any buying, that the power is still to the downside. So any buys you take should be properly thought through and with a clear plan. And obviously all our trades should have clear plans. Yeah, so that's the S&P 500. And looking at the Nasdaq, it's a similar picture. So we were down at these levels 14th May, we went up here. 16th May, we came down, and we were coming down, creating supply as we came down, creating supply. We've now created another supply zone. Again, we have a similar level to the S&P, the downside. That's still got some room to go, which is what informed the trade idea that I shared with the guys on our Discord channel for the roundtable, which was a trade that I took in the Nasdaq just yesterday, on Friday. Oops, what's happened to it? Just giving it a second, coming up. So that's a trade that I took. This was the before picture. This is a short-term income trade on the 15-minute chart that I shared with the guys. And looking at it now on the Nasdaq, you can see the trade was taken in here as it was forming, and that's what happened afterwards. That was, so we shut the trade down just before the close on Friday, and that was the outcome of the trade. Just some short-term income trading on the Nasdaq. You just using the supply and demand methodology, and that's what we got out of that. Okay, so for going into next week, like we said, the levels are pretty much similar to the ones on the S&P 500. Okay, and then also some of you wanted to see silver. So silver has had a better week than the last few weeks. You can see it's been a continuous move down, not been able to close anywhere, above any supply zones until this week. We've not closed above it yet, but we've managed to trade right through it. So we will, coming down, we probably will find that will be some interest to buy this market down in this level. The fresh supply zone above current price is up in there. Okay, so that's what we've got. So I'm going to end the video there, guys. Thank you all for watching and sharing the videos with your friends and people who are interested in trading. Thank you also for all the feedback. I do appreciate it. Some of you have contacted me and told me you found the content useful. It's really good to know that my ramblings make sense to people, so thank you for that. And also thank you to all of you who continue to share your ideas on the thread and continue to post your ideas. Well done to Mr. Fibbo. YKNF, you were asking for how he took that trade. It's really simple in terms of the, if I may, Mr. Fibbo, I think the idea was to short off of that supply area. So the supply going down to a smaller time frame would have been up in there. So Mr. Fibbo got very close to the high, and that's how he got the whole trade. Just a quick, I saw your question there to him. So thank you again. I'm hoping this month we will be having a webinar, the usual TIOF webinar. I'll announce the date later on in the month, probably in the next video or on Twitter. And also, if you are interested in coming on board the roundtable, it's a subscription service where we meet every weekend, every Sunday before the markets open, and we go through the charts. Or if you wanted to buy the video course, the supply and demand, the 7 videos we have, or even better still, coming on one-to-one mentoring with me, where you get access to me for weeks on end, and also get to become part of our Discord group. This is a Storehouse Roundtable Discord group, again, where we have all the pairs and we talk. It's a group of friends just sharing ideas. This is usually for the people who come on the one-to-one training with me. It's my sort of inner circle niche of friends. So again, thank you to all of you. I wish you good trading, trade safe, trade well, and we'll talk again pretty soon, I guess. Take care, everybody. Bye for now.